Net interest margin is at 30-quarter high at about 4.26%.
We'll have to see the growth trajectory in China as they get by the COVID lockdown.
But it was a soft quarter that Container Corp reported. In fact, the net profit was aided by other income.
18,170 is what the Nifty has touched this morning, while the Bank Nifty is gaining from the front, up about 127 points.
I think there have been a few surprises in the results season where I think few segments, especially like Europe, has done better than expected.
We have given earlier the guidance for the current financial year. In the percentage of RAM will be maintained at 55 and the corporate credit will be maintained at 45.
In terms of the fiscal deficit, our expectation is that we consolidate by 50 basis points.
Nifty went and hit an intraday high of 18,200. Then the fall from the top, the slip, the profit booking. We went down to levels of 18,123.
Payment of 7,000 crore rupees had to be made in equated installments ending in July of 2023.
This is the second consecutive quarter of 9% plus margins that Maruti is delivering, which is very good. Nifty is at that 18,114 mark. The high of the day, that is 18,201, has been acting as a resistance.
Well, that was a day so far. Hello and welcome to a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 News studios. I am Prashant. With me in the studios here, we have Reema and Surabhi. And of course, our man in the newsroom, Nigel, is with us as well. Guys, hi. Good afternoon. Packed foursome, right? I mean, it's going to be good. Well, you know, 60 minutes to go for close, and things are looking a little off color because the initial gains are all but gone. So the early gains are all but fizzled out. And this is a more flat kind of day, and none of the go-go enthusiasm, which one could feel in the morning, early morning, is there. By the way, the high today on the Nifty is almost exactly the 38% retracement of the full fall, from the all-time high of 18,887 to the 12th of January low. The 38.2% Fibonacci retracement stands at 18,191. We crossed that, I think, by 10 points or so. But broadly, it coincided with that level, and then there was a fall. The 20-day moving average, I mean, which we kind of thought that we'd left behind, well, that comes back into play on the downside, but that stands at about 18,047. Mid caps and small caps are taking it a bit easy. They're down between 0.3%, 0.4%. Market breadth is a little negative. Sectorally, autos is a space which is doing well, and we'll tell you why with stocks like Maruti, Tata Motors, etc. Real estate, PSU banks, and metals are three areas which are under some pressure. So that's a quick note to start the show. Guys, hi.
Hi, so just take a look at the banking names, right? The Nifty Bank is currently down 175 points. Pull up the contribution plate of the Nifty Bank and you would see that HDFC Bank is actually up nearly 150 points. So if it wasn't for HDFC Bank and the up move that we are seeing in HDFC Bank and its contribution to the Nifty Bank, you would have seen a very sharp fall in the banking space. There you have it. The Nifty Bank is down 170 points despite a 150-point up move coming in from HDFC Bank. So in a way, HDFC Bank is single-handedly preventing the Nifty Bank from collapsing. So that's point number one. Apart from that, just to take forward the point that Prashant was talking about, it's the Nifty Auto Index, which is the top sectoral gainer in percentage terms, up 1.2%. Maruti posts numbers. Tata Motors, Bajaj Auto's numbers are yet to come. Third, pull up the IT chart. Now, the Nifty 3-month IT chart would show you that how the recent low on the Nifty IT index was hit sometime in the month of December, and that coincides with the time when HCL Tech had come out with a profit warning. The date was 9th of December. You can see that sharp spike of fall coming through in the in Nifty IT. Since then, that was the bottom for the IT, and since then, as the numbers have come through on, for Q3, you have seen a recovery in IT names. And today, it's a lot about the mid-cap IT names, even the ones which have disappointed, like L&T Tech, LTI Mindtree, Happiest Mind, Emphasis. In fact, all four of these mid-cap IT companies' numbers were not great, Surabhi.
Reema, speaking of mid-caps, actually, that was the part of the market that I was looking at, because that's also telling you that there's no excitement. I mean, the mid-cap index continues to consistently underperform. Today is no exception. We are down about, 0.4% of the mid-cap index. And if you look at the results, I've got a sheet open here, which is results over the last 24 hours. It's actually more negative than positive, or more red than green. Just to name some of the stocks which are still reeling under that sort of a result reaction. On the downside, I mean, look at Tata Communications for that matter, like 4% down. These are not immediate results in the last couple of hours, but the reaction continues even today. Something like a Shoppers Stop, a couple of those names. Colgate, we'll hear more about Colgate as we go, though Colgate actually recovered. The initial sort of gash was slightly deeper when the number hit the screen. It's trying to stage a bit of a comeback. We'll, discuss that with Mangalam in just a bit. But hey, it's not all negative. Guess the number that stood out for me. Guys, it was actually Chalet Hotels. The stock zoomed 7%, and we all know why. Great numbers. And, consumption and travel continues to buzz around. I don't know, any plans you guys are making?
Well, you're showing us dreams, Surabhi.
It's budget season, so yeah, you can only wish.
But one of the travel companies we had spoken to, and he indicated that, consumption is getting hit, but not for travel. So people are actually prioritizing travel, and they're saying, okay, this is the only expense that we're not willing to cut back on. Everywhere else, we're willing to say that, okay, fine, I'm going to let go of this. I can't afford it. Inflation is pinching me. But travel is something that they're saying that, okay, guys, this is the only expense I'm allowing myself.
Totally get that mindset. Yeah. Totally get it.
So travel is actually unaffected, whether it's like,
Absolutely. Well, I think Nigel would concur, right? Nigel, hi.
Yeah, hi, guys. So, first, just getting some news on our sister channel that in Delhi, NCR, there have been some earthquake tremors that have been felt out there. So, just hoping that, in fact, everyone's safe out there. And, all our folks hope it's not too bad, but that was just an initial flash that did come in there. Getting back to the markets, the 18,200, 18,100 call and the 18,150 call. There's aggressive writing being seen out there. And between those three strikes, the total open interest build-up is 1.5 crore shares. Remember, tomorrow we have expiry that will play out. So just keep that in mind, that 18,150, 18,200. The bears are playing that this level is going to be holding out. The good news, though, is there's writing being seen at around that 18,100 put. And I say that there is writing out there because even when the markets are at the low point of the day, the premium on that one was lower. So that's indicating writing. The premium is around 40 rupees out there. So those that are writing that particular strike, they are counting on that 18,050 odd level holding out. So just want to give the range for the market. Tomorrow you have expiry, 18,050 on the downside, and on the upside, 18,200 is getting sold into numerous times. Today we made multiple attempts. So just keep that in mind, Rima.
Okay, interesting. Nigel, one of the feedbacks that I got from the dealing rooms is that not all HNIs are willing to roll over their positions because next series is going to have the budget. So they're letting some of their positions lapse because they don't want to continue and hold on to. So at least from the HNI desk, that was one of the feedback that perhaps rollovers could be maybe very marginally, but lower because the next series is going to have the budget. But let's tell our viewers what we've lined up on the show today on Closing Bell. Colgate, Maruti reacting to Q3 numbers, a complete fine print coming up on the show.
Bharti Airtel is in focus on the back of a Morgan Stanley note. Key highlights from that note lined up in just a bit.
In important earnings to track for tomorrow, we'll get you expectations from Tata Motors and Dr. Reddy's.
And we're tracking market technicals today with Jay Bala of Cash the Chaos.
And to discuss top portfolio bets, we've got Rupesh Patel of Nippon India Mutual Fund.
Okay, well, let's get you how to position yourself in the last hour of trade. Mitesh is always with us. Mitesh, hi, good afternoon. Just as we come to you, the Nifty is turned into the green. What would you recommend?
So, Prashant, I think it's still a market, which is not given a breakout. In fact, today morning we, were hoping that with the gap up and if we sustain above 180, 200 zone, then I think we'll see follow through. But the breakout hasn't happened, but the structure isn't weak as yet. So, we're still, hoping that eventually I think we'll break on the upside in the next couple of sessions. So, trading with mild long bias over here. Crompton is something which I like as a stock. It had declined from levels of 370 to about 320 and now is giving a reversal. Could bounce back to as high as about 345, 347. So now can be bought with a stop just below levels of 330 on the downside. And the other stock which I like is mid-cap IT name, First Source Solutions. That's a buy with a stop at about 104.5 for targets of 111.
Okay, all right, Mitesh, thanks so much for joining and giving us that quick update. By the way, let's focus on a couple of numbers. Colgate, that's a stock in focus. It's down closer around 2%. post reporting their Q3 numbers. Mangalam joins us to run us through the fine print out there. Mangalam?
Well, it's a subdued quarter coming in for Colgate. If you just take a look at the company's revenue, just shy of 1,300 crores, we were looking at a number upwards of 1,300 crores, 1,330 odd crores is what we were expecting. The EBITDA of the company has come in at 360 crores as against CNBC-TV18 poll of 390 crores. So that has missed estimates as well. Margins too have missed estimates by about 150 odd basis points. The net profit has come in at 243 crores. But that as far as the reported numbers are concerned, my sense is that the volumes have declined in anywhere between 3 to 4 odd percent because the company had taken about 4 to 5% price hikes. So the revenue has grown just 1% year on year, then that would imply a volume decline. However, two things that really stand out in terms of numbers. The first one is that the gross margin decline has moderated. So versus 300 basis points that we've seen earlier, the gross margins have declined about 80 basis points. So that's telling you raw material inflation has begun to improve, or the situation has begun to improve. And secondly, EBITDA margin has contracted about 170 basis points, but a large part of that is primarily on account of the company spending more on advertisements. So advertisements as a percentage of sales have increased by about 140 basis points. So let's see whether the new MD's strategy actually plays out in terms of performance over the next few quarters. I'll be watching out for that. The stock currently at the low point of trade, but trades at a discount to other peers at around 30 times FY24 earnings too.
Okay, 30 times earnings, but a discount that tells you a lot about the FMCG space. Thanks, Mangalam, for that. Let's exactly take that point forward with Mehraboon Irani. He's joining us on the show today. Mehraboon, great to have you with us on the show, and it feels good to be back to talk to you as well. Been a while. We have lots of stocks to discuss, but I do want to start with Colgate and the point that Mangalam just made. The fact that it's not as expensive as the others, though this quarter is not really inspiring too much confidence. Would you sort of look at buying in at all, or would you look at other bets?
Well, at the present price, which I heard Mangalam say that, first of all, Surbi, I think it's always nice speaking to you and nice to speak to you after a very long time. I think as far as Colgate goes, I think this is not a stock which should be bought in a hurry. I'm personally holding it for the last many years, and I consider it to be a part of my core holding. And the fact that the stock is absolutely underperforming over the last few years. Am I in a hurry to sell? Honestly, no. If you call it a core holding, you don't look at it. The stock at the present level certainly gives a lot of comfort in a market in which, honestly, there is a lot of uncertainty still. Relatively, India is expensive as compared to quite a few other markets. So at 1450, 1460, whatever the price would be right now, I think if somebody buys it, there is nothing honestly to worry. But this is not a screaming buy by any standard. I think Colgate is a company which is working very hard to retain its market share. So we will see advertising costs keeping on going up with the new CEO in place. Let us see as to actually what happens. But at the price at which it is, I don't see too much of downside risk, but certainly not a screaming buy by any standard in the present scenario of the market. Do I understand from sources in the industry that rural and semi-urban demand on the whole for FMCG sector, FMCG stocks, I think it's a positive because demand is looking up after a long time.
Okay, Colgate's market share is almost 3x that of its nearest competitor. Very high penetration, market recall, brand value, etc. But let's talk about Maruti. That on the other side is reacting to a strong set of Q3 numbers. Sonia's here with the complete fine print. Sonia.
Well, thanks a lot for that. As you rightly pointed out, very good set of numbers coming in from Maruti, much better than what the street was estimating. The big beat came on the margin front, and that's not just because of lower raw material costs, but across the board, employee costs, other expenses were all lower, and margins came in above 9% for the second consecutive quarter. It was a gain of 300 basis points year on year and 40 basis points quarter on quarter. But the raw material tailwind is a big one. So if you look at it just for this quarter, raw material cost as a percentage of sales was down 310 basis points year on year. And revenue growth as well, solid, no complaints at all, 25% growth, EBITDA growth almost 82%, and profits more than doubled on a year-on-year basis. Now, the management said that there were a couple of things that aided their performance this time. One was cost reduction efforts that they undertook. They saw improved realizations. favorable foreign exchange variation, softening of commodity prices and higher non-operating income. In the negative factors, they said that there were higher sales promotion expenses. Of course, as we know, they had a couple of new launches as well. So that marketing and sales expenses hit their earnings a tad bit. The company is also very bullish. They have a very high order book at the moment, out of which from a 360,000 order book, about 119,000 is just from their new cars, the new sales that they've seen. So all in all, good set of numbers, and the stock is one of the big gainers today.
Thank you very much for that. Mehrboon, 2023 is going to be a big, important year for Maruti, right? We'll know whether finally those SUV launches that Maruti is betting on and gunning to get its market share back up will work out or no. Thoughts on Maruti? Would you wait for the proof to be in the pudding, wait for the launches and the reception, or would you buy ahead of it?
Well, I would like to state 2 or 3 points in favor of Maruti right now, and I heard Sonia speak about it, and I looked at the results also. I think absolutely no complaint with the results. I think it was a beat on many parameters as compared to the expectations. Also, as far as the auto sector goes, I think a year and a half ago, we were talking all the time about supply side constraints. Most of these problems possibly is behind the sector right now. Demand on the whole is still holding good. The order book as far as Maruti goes is quite good. Commodity prices coming down, advantage as far as raw material cost goes, improvement in margin, all this is now getting reflected, certainly yes. As far as the entry into the SUV segment goes, I think they launched 2 models, I think Fronx and Jimny at the Auto Expo recently. They already started accepting the orders. And the point in favor of Maruti, and a very strong point, is that success rate as far as new launches is much higher than the overall industry average. I think it's over 70%. Over the last 10 years. And I think this should augur well for Maruti in helping it regain market share. So if the market share says 43 or 43.2% right now, one can possibly expect it to go up to around 45% or slightly higher over the next 2 years. So all these are very positive. The question is, should I buy Maruti in a hurry? I think if one expects an earning per share of around 260 to 280 rupees in 2024, at the valuation at which it is, in a market in which I personally believe cash is going to be king for some time to come, I think I won't be in a hurry to recommend the stock at the moment, though there's a distinct possibility that if the market, for whatever reason, including the budget, if it tries to make a new high in the interim period, I think Maruti also could possibly go and scale a new high. I'm not ruling it out, but yet, despite all that, as I mentioned earlier, cash is king, and I would prefer to do the waiting game for a large part of the market, including most of the auto stocks, and that includes Maruti too.
Got it. Mehrboon, hi, good afternoon. I don't know if you're a wine connoisseur, but I don't know if you put your mind to Sula. It's like the only player in that category, in the listed space. I don't know if you can categorize Sula as the product is premium, pricing is premium or not. I mean, that depends on how you look at it. We had the management recently with us, and they were, very clear that they want to expand the market, most definitely. So pricing, it will not go up. It's perhaps has to be more affordable. But have you looked at the business? Any thoughts?
Well, when the IPO came, honestly, I think it was not a very bad IPO, neither a great IPO. I think at the price at which it is, I give it a clear pass. And I think in this particular segment, if you ask me, in alcoholic beverages on the whole, if you ask me, I think a stock which attracts my attention, though I'm in no great hurry to buy it, is United Spirits itself, a stock which I have not bothered to look at positively for the last few years. I think at the level at which it is, I think considering the fact that what has happened to this industry, the premium segments, prices have come down. I know for sure that McDowell's, that is United Spirits, is concentrating on the premium brands. The smaller brands have been given away to somebody else to manage at a particular fixed type of income for them. So I would say that if something excites me in this space, it would be United Spirits at number 1, number 2, number 3. And Sula or even the other companies which are listed in the market, I think I would not be too much interested in. Though there is one stock in the space which, because of a lot of corporate action which took place, I think I am personally holding it. Clear disclosure is Tilak Nagar Industries, which I'm quite positive on. As far as Sula goes, I think valuation-wise, I was not very comfortable at the time of the IPO. And I have not heard the management interview on your channel so far. But as a result of which, I would give recommendation on this particular stock a clear pass right now, Prashant.
Okay, all right, Merbun, quite an exciting list of picks you just spoke about. So we'll keep all of them in mind, but request you to hang on for the time being. We'll slip into a short break. You come back, we'll focus on the market technicals. Jai Bala of Cash Chaos will be joining in.
Welcome back. Bharti Airtel is the stock which is on our radar. Just look at that intraday spike in Bharti Airtel. The stock has recovered 1.5% from the day's low. Through the course of the trading session, it was languishing in the red, and suddenly you had that up move coming through at about 2 o'clock. The news is coming in from Morgan Stanley, a brokerage house, and they're saying that there has been an indirect tariff hike. Now, Bharti Airtel, in India, there are 22 circles. Okay, India is divided into 22 telecom circles. In the month of November, Bharti Airtel had done a tariff hike in 2 circles, Haryana and Odisha. And what they did is that they raised the minimum recharge plan. Earlier, the minimum plan was about 98-99 rupees. They increased it to 155 rupees. They did it only for 2 out of 22 circles.
That's a substantial increase, though.
That's a substantial
even in those 2 circles, yeah.
It's a substantial increase, but just for 2 circles. And they were testing waters. Because typically, when you take such a big tariff hike at the lower end of the strata, there is churn. There are people who fall off. They will say, I'm going to move to another competitor. So that's what you call churn. So they were testing waters to see the kind of reception that they get to it. Now that almost 3 months have passed, 2.5 to 3 months from that tariff hike, Morgan Stanley has picked up from its channel checks that Bharti Airtel has extended this tariff hike to 7 more circles. Okay, and that list of 7 circles will also come up for you on your screen. Again, the earlier tariff hike or the old minimum plan was 98.99, going up to 111 rupees as well, based on the amount of data that you get. Now the minimum plan is about 155. Again, it's a substantial 40 to 50% increase in the ARPU. Right? But remember, out of their overall subscriber base of close to about 330 thereabout, there would be only very few of them who are on this minimum recharge, because these are also the non-data plans. At this, you're not going to get a lot of data, right? This would be the non-data. And in that, you're now covering only 9 out of the 22 circles. So it's not going to be a bumper impact on the top line. But according to Morgan Stanley, the improvement in the top line could be to the tune of 1.5%. So the question from now on is, 1, if it's true, because this is what Morgan Stanley has picked up from its channel checks, and 2, is this a precursor to a pan-India, right? 9 out of 22, you're still left with 13.
And I guess that's the big question, right? Is it sort of testing waters to see, appetite, customer appetite at the end of the day, and can they actually then take this forward into a wider hike, which will include data plans as well? I guess that's the one trigger that the market's waiting for.
So they've already tested it with 2 circles. Now they're going to test it with 7 more. These 9 circles contribute about 45% to their overall subscriber base. So now it's pretty significant. But now we'll have to see whether it becomes pan-India. And remember, Vodafone Idea can follow suit and do this tariff hike. But Reliance Jio does not have those minimum, 2G kind of data plans, so it's not really going to be affected by this move. But Mehrabun Irani is with us. Mehrabun, for a very long time, we've been saying that for any telecom company, it all boils down to tariff hike, because that has a direct flow through on revenues and profitability. What have you made of this news? And, would you bet on Bharti? It outperformed last year. Do you think it has it in itself to outperform again this year?
Honestly, I've never been a great fan of any of these listed telecom companies, I would say, over the last many years. But if you ask me, the point is the price hikes, if they happen, tariff hikes, if they happen, I think it's going to be certainly a big positive for Bharti, which I think is a prime listed telecom stock. At the present price of 760, 770, 775, I would again shy away from recommending the stock, while stating that if there is a decent price hike coming and if others follow suit, I think this can easily be passed on to the consumer who is going gung-ho and crazy about social messaging and making calls. People have forgotten to talk to each other otherwise, and they're only using the smartphone that they have. So I think it's a clear positive for Bharti in that sense, but from the price angle, looking at the overall market condition, I think I'm not in a hurry to recommend the stock, while stating that ultimately this company will end up doing well.
All right, Mehrabun, you've given us your preferences, even with regard to United Spirits and the Sula. But what about Pathan? That's going to be a big blockbuster release, supposedly. And the initial bookings as well are looking up. PVR is up close to around 3%. Now, we had the management a couple of days ago, and they said that there'll be synergy benefits post that merger that comes about. They continue adding screens, and they're optimistic that content will look up. So, in turn, hopefully, it reflects in their occupancies. Your sense?
Again, multiplex or the theaters or movies being exhibited in theaters right now, I think is again a space which I would stay away from. I think the fact is, yes, collections could improve if the content improves at the end of it all, but I think it fizzles out after 1 or 2 or 3 days and you wait for another big blockbuster movie to come. And if the word of mouth is not very good for even a movie like Pathan, which has attracted the maximum attention from the media as well as from the public in the last many months, I think ahead of even the South Indian blockbusters which we have seen like RRR or even a Bahubali in the past, I think if this word of mouth is not very good, we all know what you and I will be discussing maybe 2 or 3 or 4 days later. Having said that, I don't want to wish as to how the content of the movie will be. This is a business which I think will keep on going well, but from the profitability angle and from the valuation angle, should one buy into it, I think the whole model, according to me, over the next 2 to 3 years should undergo a major change. That's my personal feeling. If you look at the number of people in terms of the total occupancy of the theatre, I think you will agree with me, Nigel, on this. So not a great fan of this space at all.
Depends on what you're watching, Mehrabun, but I take your point on board and you're not a fan of this space. It's always good hearing your thoughts, Mehrabun. Thanks so much for stopping by.
Nigel, let me put it one way, that I think there are a lot of there's a lot of improving content which is coming on the OTT platforms, and I have the right to say it because I was not a fan of OTT platforms at all just about a year back, and now I spend maybe 90% of what I'm watching I'm seeing it on one of this OTT streams. So I think you need to understand that the way we were watching movies, the way we are watching movies, has undergone a change, and I think over the next 2 to 3 years, many more things should be happening.
A very valid point, Mehrabun. Take your opinion on the stock as well as your personal preference on board. Thanks so much for stopping by, Mehrabun, and discussing a whole host of stocks in the last half hour. But let's focus on another one, Nykaa. That's up in today's trading session. It's up close to around 7%. What's got the stock excited? Manglam joins us to fill us in with a quick take.
Well, as far as Nykaa is concerned, it's been a big underperformer. The company has gone ahead and announced a CFO, the appointment of a CFO, Mr. P. Ganesh, who currently joins in from the CFO's position at TAF Group, which is a tractor maker itself. The stock also buzzing on high volumes on account of a couple of large trades that took place on the counter this morning. So that's another reason why it's up. So it will be interesting to see who the participants are, primarily because after a 14% correction in January, a 60% sort of correction from the post-listing high itself, some people are finding valuations attractive. And by those some people, I mean ICICI Securities. They wrote a report yesterday saying that the valuations are now turning palatable. They've upgraded the stock from hold to add because they say that at peak stock price, the revenue CAGR or compounding requirement over the next 20 years to justify the valuations at which the stock was trading was 23%. But with this correction, it has come down to about 15% itself, and that's what their calculations on discounted cash flow modeling shows. So they've ascribed a 100 rupee per share price for their beauty and personal care business, and fair value potential for fashion business could be anywhere between 14 to 75 odd rupees. Competition could be one of the flies in the ointment going forward for Nykaa. So they've cut the target price from 175 to 145, but it is an upgrade after the correction.
Yeah, got that, Manglam. That's an important last point, right? The other day I was walking past one of the new Shoppers Stop beauty stores, not a customer yet. And then, of course, there's talk of Reliance entering the space in a big way as well. So, will the monopoly really end? That's what we have to keep in mind. That's Nykaa for you, though, up 7% today. Moving on, just a quick update on the budget quiz. You came, you saw, and you answered. Thank you, viewers, for participating in the CNBC-TV18 budget quiz. The question was, what was the projected nominal GDP growth for FY23 in the last budget? The correct answer is B, 11.1%. And here is today's winner. Congratulations, Himanshu Chaurasia. Remember, keep watching CNBC-TV18 and win prizes daily on the CNBC-TV18 budget quiz. Prashant, did you know that one? Nominal GDP projected last year?
No, I did not. I have to do some more reading, right? All right. Let's bring in Jay Bala now for cashthechaos.com. Jay, great to have you with us here. Thank you very much for your time. You're calling this a bit of a corrective rise, right? for the market. But the range still holds. I mean, unable to take out this 18,200 kind of levels, gets there, and then there's another wave of selling. This 400-point range is held from the beginning of the year. Has the case up or down become stronger at the margin from the last time we spoke, Jay? What's your sense?
Thanks for having me on the show, Prashant. See, the markets are lacking leadership. If you look at heavyweights that can contribute to the index move, like Reliance, ICICI, SBI, or ITC, they've all turned lower, and they are at least in a short-term downtrend. And when it comes to sentimental leaders like Adani or Bajaj Twins, they are also in a falling sharply. So that's also not contributing. So there is no contribution in the form of index weights as well as sentimental weights. So the markets are compressed in a lower range near the bottom third of the move from 18,800 to 17,700. So that's the reason why we see market consolidating between 17,800 to 18,300. So I see this as a corrective rise. The markets have turned lower, in my opinion. The resistance for the Nifty is at about 18,350. Maybe it can stretch to little come somewhere close to 18,400. But once 17,850 gets broken on the downside, the markets are heading much lower. And Reliance is not helping the bulls much. If the stock were to close below 2,400, ballpark, I would say that it's more negative for the Nifty.
Reliance on a daily, Jay, or you need a slightly longer time frame, a close?
The daily close will be sufficient, but the point to note here is it's come down from 2,760 to 2,400. So there might be a little bit of a bounce back for the stock if it were to close below 2,400. And so don't get confused by that. But closing below 2,425, 2,400 range is not a good sign for Reliance, and I hope it doesn't close below that today.
What have you made of this resurgence, resilience in IT stocks now? It's been 3-4 weeks now that IT stocks are doing well. Do you expect it to continue? And which IT stocks appears to be the strongest?
Rima, we've been speaking about HCL Tech, Persistent, and Coforge for some time now. And I know I had said even last week that you need to single out names and then choose your stocks from the pack. I think Persistent and Coforge have potential to claim record highs. So given the fact that Persistent has moved from 3,400s, 3,300s to where it is now, the risk reward is skewing quite lower. So if you want to position yourself on a fresh basis, we had discussed this in November. I said Coforge taking out 40-60. You should allocate 10%, which is a double bottom breakout, and then buying less of the 90% on a pullback. It did exactly that, came to 3,700, and it's probably heading towards record highs. That's a good move if it were to happen. But given the fact my view is overall negative for the market, I wouldn't suggest allocating your normal sizing for the IT stocks. You might want to reduce your position to much lower level than your normal allocation.
Hi, Jay. Good to speak to you. Jay, what about the ICICI Bank stock? That was the big outperformer in the last 24 months or so. Valuations, though, they were not as cheap as they were, say, in January 2021. Your view on the stock from year on, because that's been a big underperformer. I think it's down close to 10% from the start of December or from November 30th. View on ICICI Bank and the Nifty Bank as well.
Hi, Nigel. I think the audio was breaking up there, so I couldn't hear you clearly.
ICICI Bank. ICICI Bank and the Nifty Bank. ICICI Bank has been underperforming for the last 45 days or so. Yeah.
Okay. All right. See, there is a mild relative strength for the Nifty Bank, but it's not able to push past resistance at about 43,600. But the lack of leadership is coming from private sector banks. Kotak is the weakest from there, but watch out for ICICI. If it does break below 857.55, I think it's just a matter of time. That will be critical for the sector. That will turn the trend from the pandemic lows to the record highs for ICICI and contribute to downswings for the sector. So 857 to 855 is absolutely critical for the banking.
Okay. Jay, before we let you go, I just want your view on global assets. I mean, everything seems to be rising in 2023. I think we've just lost that line with Jay. Do we have him back on? Not quite sure. But yeah, it's been that year, I guess, Prashant. You know, look at crypto. Look at the US market. We've been discussing the NASDAQ. Almost everything gold. Everything and anything oil, what isn't rising, apart from India?
A very different kind of year, right? I mean, at least so far, but it's just, I mean, we're in the fourth week of this year, and there is a bit of reversal on some of the big trends of 2023. 2023 was what? I mean, yields were higher, equities were down, dollar was stronger. All of the three things, the three big sort of macro trends, they're reversing as we begin 2023. Let's hope it stays that way as we go into the rest of the year. We'll take a quick break here, and as always, we'll get you a check on what dealing rooms are looking like, what they're talking about on D Street Chatter. We'll, of course, also get you buy today, sell tomorrow, short-term trading ideas with our tech.
Welcome back. We're coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, it's that time of the day when Nimesh joins us on D Street Chatter. Nimesh, what do you have for us today in terms of, the flows picture?
Nigel, again a day of consolidation, but in terms of flows, I believe the FIs are better sellers. So that's the overall feedback, that barring technology where there's some bit of buying interest back, the rest of the sector seems to be seeing some bit of selling pressure, largely from the FI. So that's the overall feedback. Again, we're stuck in this very narrow range for the last many weeks now. We've been 17,800 on the downside and 18,300 on the upside. So that's been the range that we've been struggling to break on either side since the January or the beginning of this year. As I said, technology is one space where there's some bit of buying interest back, but largely overall it's a mixed bag. Again, better sell is what the feedback seems to be from the most of the FI desk. Some individual reactions to results, but that's something to watch out for. But broadly, the sense is we are going to be in this range between 18,000 on the downside and maybe 18,200, 18,300 on the upside.
And hopefully nothing untoward comes out from the budget 2023. But what about individual stocks, Nimesh? What are you picking up?
So in terms of individual names, the first stock on my list today is Syngene. That stock is under pressure post-week Q3. But I believe beyond that, there is a buzz of a large block deal very soon. Remember, for almost a quarter now, there has been a strong buzz or indication that one of the promoter entity is looking to sell a large chunk, and hence that stock is under pressure today. The second stock is Concor. Again, after week Q3, the reaction was mixed from most of the brokerages, but again, there is a bit of selling pressure from the larger FIs in Concor. I guess, barring divestment, there is no further trigger for Concor, at least in the near term, and hence some bit of selling pressure there. And the last stock is Nykaa. Even Mangalum spoke about it in closing bell. A bit excited in today's trade on the back of that CFO announcement. But I believe there is a large block, nearly 0.5% equity changing hands. An FI looks to be a likely seller in today's blocks. The disclosure will be important. But some bit of excitement is back in Nykaa after a large block deal and the fact that they've appointed a new CFO.
Okay, got that. Thanks, Nimesh. That's an interesting one as well, that block deal, obviously, and the CFO. Nykaa in focus today. By the way, the auto sector is really revved up. The rest of the market's absolutely quiet, like nothing's happening. But look at Maruti. It's the Nifty leader this afternoon, 3.5%. Tata Motors, Bajaj Auto, the other two, which will be reporting numbers soon, they're also up and about. So that's what's moving on the screens right now. Mitesh Thakkar is joining in with some calls as we get into the final moments of trade and some ideas you can work with tomorrow. Mitesh, good afternoon. So what bets are you going with?
So I think, a couple of names which are on the list. I have HAL, that's showing good continuation after consolidation yesterday. So more of a BTST kind of a call here. Keep the stop at 25.30, 25.65 should be the target. And the HDFC twins are doing very well, and HDFC Limited can be a BTST with a stop below 27.70 for targets of 2800.
Right, Mitesh, thanks very much for that. By the way, the market's absolutely flat. 5 or 6 point change. That's about it. 18,124 is what you have. Some flashes at the bottom of the screen. This is sources of CNBC-TV18. The budget 2023, which is the last full budget before elections in 2024, will be people-centric. Lots of measures, people-centric. Budget may widen the base of Sukanya Samriddhi scheme and some more details. Special health insurance scheme in the budget may be implemented via public-private partnership. We'll get details of all of this in a bit from now with our colleague from Delhi. So this is an important story which is coming through. RBL Bank is weak, is down 4% or so. Mitesh, I don't know if you've looked at this. RBL, I put this out on Market Laser in the morning. Basically, it broke below that trend line, the June low trend line. Any thoughts? RBL?
That's right, Prashant. It's broken trend line as well as given a couple of negative signals on the indicators and broken below averages as well. Now, only thing what can happen is that possibly a day or two of pullback because it's corrected from 187 to about 160 already. So I think around 165, 166, you will see again supply pressure coming. So that becomes my selling zone. And I think on the downside, a target of 150 is a minimum because that's where the last low was made in the last week of on the 23rd of December when the stock rallied from there to about 186 level. So 150 is a minimum, but maybe below that also can happen.
Okay, thank you very much for that. Let's talk about Tata Motors. That is one of the big Nifty gainers today, up 3.5%. Numbers tomorrow, it's expected to be a strong showing with both JLR and the India business registering a 15 to 30% volume growth. Sonia is here with the expectations. Sonia.
Well, thanks a lot for that. As you rightly pointed out, it's expected to be quite a strong showing for Tata Motors this quarter. In fact, both JLR and the India business have grown at a fast pace, although the stock is down almost 17% in the last 1 year. So what are we expecting this quarter? Now, in the India business, as we know, the Tata Nexon has done phenomenally well. Of course, a very small portion of the business, but overall passenger vehicle growth has been strong, growth of 33%. While the commercial vehicle business was down about 5%. Even JLR, because of the improvement in the chip supply, JLR volumes have looked pretty good. JLR growth has been about 14% on a year-on-year basis. Now, the realizations are expected to go up in the JLR business about 4.5% year-on-year. That's because of a superior product mix, which will aid the numbers on account of more number of Range Rover sales in this quarter. Now, if you look at the Q3 consolidated numbers, we're expecting a revenue growth of 15% year-on-year at 83,147 crores. The EBITDA to go up by about 29%. The margins consolidated to improve to 10.4% versus 9.4% earlier. And the profits at 875 crores versus a big loss that the company reported earlier. A couple of things that we'll watch out for very closely is what the commentary on Jaguar Land Rover is. They have come out with a guidance of turning free cash flow positive by the end of the fiscal, whether they manage to meet that or not, and also whether things in key markets like China have improved since there is a rebound in that market now post the reopening of COVID. So a lot of the commentary will also be in focus, but the stock ahead of its numbers is looking very strong. Back to you.
Thank you very much for that. Let's also invite Rupesh Patel, Senior Fund Manager at Nippon India Mutual Fund, on the show now. Rupesh, afternoon. What explains this extremely range-bound moves that we're seeing in our markets now for nearly a month? In fact, probably even more than that. What, according to you, is going on? What are the kind of flows that we are seeing? What's the FIM mood towards India now?
So, yeah, I mean, if we look at markets, then from COVID lows, the markets have given very handsome returns. In fact, forget COVID lows. If we look at February 2020, just before the COVID-related correction happened, we have seen markets giving very healthy returns from that point as well. If we look at last 1 year, yeah, I mean, market returns have not been very great. But remember that and this was coming on from a base where the returns were very, very high. And we also saw during this phase, market returns came a lot on account of earnings, changing multiples getting re-rated. Going ahead, and as a result, if we look at our premium over MSCI emerging markets, I think we had gone above our historic averages. And some of the gain which India had, it also happened because of a struggle which some of our emerging market peers were having, whether with respect to COVID or with respect to some of the policies which were being followed there. We have seen that in last few weeks, some of the flows from FIIs have gone to other emerging market peers, which were relatively cheaper, where valuations were still making a lot of sense as compared to India, where we were on the higher end of valuation. So that's what is playing out in the market. Going ahead, I believe in terms of returns, market returns would be more linked or aligned to earnings growth rather than be multiple driven.
Rupesh, the last time we spoke, afternoon, Prashant here, you said you were underweight IT. Stocks have moved on from there. Are you correcting that position, or you think this will not last? This is just a trading bounce. What's your view?
That's a great question. So you are absolutely right. Last time when we had spoken, I had mentioned that we have underweight stance on IT. And that was because of our view that we are not very sure of the bump up in growth for IT services, which we saw after COVID, will sustain. And if the growth is to revert to pre-COVID days, then the multiples are still on the higher side. That is the thesis with which we had maintained our underweight stance on IT. Now, if you look at current quarter results, whatever we have seen, it has been a mixed bag. Whether we look at revenue, whether we look at margin, or we look at deal wins, which have been reported, it has been a mixed bag. Yes, the results are not, as bad as maybe some part of the market was expecting. But we'll get real picture only a few months down the line when companies globally, they talk more clearly about their IT budgets. And we have to be mindful of global slowdown as well, wherein companies focus maybe more on, moving the nature of their IT spending from discretionary projects to more a regular cost-saving kind of projects, where margins can be a challenge. So I think we are still in wait and watch mode. We would, before we cover our a significant underweight on IT, we would like to have some more clarity on the demand outlook.
Okay, so you're waiting for some more clarity on IT. Rupesh, hi, Surabhi here. Good to be talking to you again. So I had a question on the related space. And since you're cautious on IT, I really wonder what you're doing with consumer technology, the hallowed names of 2021. What is your current positioning? And if you're not really invested, would you be looking at snapping up bargains at all? We're just discussing Nykaa, for instance. Finally, some sign of life in that stock today. But what's your overall stance on this part of the market?
So no doubt, some of these business models are very exciting. Some of them will be able to capture the growth opportunity which is lying there. But what we need to see is that whether these models will be, able to capture this opportunity profitably. No doubt for some of the listed players, we have seen that the fact that they have managed to raise funds, their ability to sustain a period of slow growth is definitely there. And at the same time, competition, peer companies which are not able to raise funds on time, they would be finding it very difficult to raise funds at elevated valuations in today's environment. So in that context, some of these listed players are very well positioned. But going ahead, we need to see that this large opportunity which is there, these interesting business models which are there, whether they can scale up profitably. Some of these businesses are on our radar. At right valuation, we would take some exposure to some of them.
All right, Rupesh, with more questions, but we're out of time. So hopefully you'll join us again sooner rather than later. Appreciate you joining in on that. Well, that's a view coming in from Nippon India. An update coming in on MCA's decision, Ministry of Corporate Affairs decision on the next chairperson for CCI. Parikshit is here. It's an important position, important story. Parikshit, tell us.
Well, we have been reporting how the lack of quorum at the Competition Commission of India is impacting the approval of several high-value deals to the tune of $1,300 million. We now get to know that the Ministry of Corporate Affairs has extended the tenure of the acting chairperson of the CCI, Sangeeta Verma, till further orders, which means that the lack of quorum at the CCI will continue. So the CCI, as per law, has to have a maximum of 7 members, including the chairperson. For a quorum to decide on some of these M&A combination deals, the quorum is a minimum of 3 members. Currently, there are only 2, including the acting chairperson, which means this lack of quorum continues and they cannot clear high-value deals. One of the deals which is pending is a $900 million US deal, which has already received approval from 8 jurisdictions. So the CCI is now likely to approach the MCA to invoke the doctrine of necessity, waive off this quorum requirement. There is some view from the industry that an ordinance should be brought in to amend this provision, but the CCI is not very keen on that. They feel that there can be clear directions from the MCA to waive off the quorum and approve all these deals which have been pending. But we can expect some fast movement on this over the next few days. A legal opinion from the government's top law officer, the Attorney General, has also been taken by the CCI.
Okay, there's just, 2 minutes to go for close. So let's start wrapping up things here. The Nifty will be down about 13, 14 points, 18,100. A bit of a disappointing day after, what looked like a pretty strong session, but was not to be, flat close. The top losers on the Nifty: Axis Bank, Dr. Reddy's and Hindalco. Just three names which lost more than 2%, but it was nothing spectacular on the downside, but more just the sheer number of losers outnumbered what was up and about. On the gaining side, Tata Motors and Maruti, perhaps only two names which were meaningfully higher. Both those auto names up more than 3% by close today. Rima.
And it's HDFC Bank which saves the day once again for the banking pack. So while Axis Bank and Kotak Mahindra Bank were under pressure, HDFC Bank has for another day clocked in a gain of more than 1%. IT continues to be very resilient. HCL Tech climbing 1.5%. TCS giving it company on the way up. And Britannia too was up and about in trade. The mid-caps trailed the frontliners, the mid-cap index ending with a decline of about 0.5%, and the advanced decline ratio firmly in favor of the losing side, Surbhi.
Yeah, in fact, I was just looking at the mid-caps, Rima. So you've got a couple of names out there, and several of them. UCO Bank reacting to numbers. Some of these actually mid-cap banks have taken it on the chin today. Central Bank of India, South Indian Bank, even PNB for that matter. Lots of selling in some of these banks that we saw. Then result reactions, Syngene, Tata Communications, Concor, a couple of these stocks on the way down. Colgate down about 2%. Winners, well, I'll start with the stock. I'll end with the stock with which I started. Chalet Hotels, if you're looking for some green, 4.5%. And Sensar, even Route Mobile, some of the companies that Rima tracks very carefully. These are the stocks that saw some green. But otherwise, a pretty listless sort of a day and some selling in the mid-caps.
But tomorrow, we've got the expiry for the month of January. So, and then on Thursday, we've got a holiday. So perhaps tomorrow is going to be more of an exciting trading session. It's a wrap and closing bell from the entire team. Thank you for watching. Don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.